In the world of high finance, wars aren't fought with tanks or missiles. They are fought with data. On January 24, 2023, a tiny 5-person firm in New York City hit send on a 32,000-word document. By the time the markets closed, $100 billion had been erased from the world's third-richest man. No lawsuits, no arrest, just a PDF. This is the story of how information was weaponized to kill a giant. The illusion of invincibility is the ultimate corporate currency. For decades, the Adani Group was more than just a company. It was the backbone of an emerging superpower. From ports and power plants to green energy and airports. The empire seemed decentralized, diversified, and most importantly untouchable. Its founder, Gautam Adani, had seen his wealth skyrocket by 2,500% in just 3 years. To the global investor, Adani was the safe bet on the future of Asia. But behind this wall of growth lay a mechanism that few dared to question. The empire was built on a foundation of extreme leverage, borrowing massive amounts of debt to fuel rapid expansion. In the eyes of the public, this was visionary. In the eyes of a short seller, it was a target. Enter Hindenburg Research. To call them a firm is an exaggeration. They are more like a financial special ops team. Led by Nathan Anderson, Hindenburg specializes in what they call forensic financial research. They don't look at what a company tells the world, they look at what the company tries to hide in the fine print of offshore filings and shell company structures. For 2 years, while the world was celebrating Adani's rise, Hindenburg was quietly digging. They weren't looking at the visible ports or the massive solar farms. They were looking at the shadow network, a web of offshore entities in Mauritius, Cyprus, and the Caribbean. According to their investigative report, these entities had no real business operations, no employees, and no physical offices. Yet, they held billions of dollars in Adani stock. The hidden risk was brilliant in its simplicity. By using these offshore ghost companies to buy their own stock, the empire could artificially inflate its share price. A higher share price meant more collateral, which meant more loans, which meant more expansion. It was a perpetual motion machine of wealth. As long as no one looked too closely at the ghost network, the illusion of the world's third-richest man remained intact. The credibility of the Adani Group was backed by the highest levels of political and institutional trust. They were too big to fail. But Hindenburg knew that the larger the giant, the more devastating the fall. They spent 2 years cross-referencing thousands of documents, tracking ship movements, and interviewing former employees. They were building a financial nuclear option. On the eve of the report's release, the Adani Group was preparing for a massive $2.5 billion share sale, a move designed to bring in even more global capital. The timing of the digital ghost was perfect. The hackers of the financial world weren't looking for passwords this time. They were looking for the truth. Imagine the contrast. On one side, a multi-billion-dollar empire with the backing of a nation. On the other, a small office in Manhattan with a 40-page PDF. When that report went live, it didn't just suggest the company was overvalued. It accused them of the largest con in corporate history. The shockwave was instantaneous. The curiosity gap wasn't about whether the report was true. It was about whether the empire could survive the next 48 hours. As the first sell orders hit the exchange, the world realized that $100 billion of wealth was pinned to a document that anyone could download for free. The mechanism of collapse had begun, and the hunter was just getting started. The brilliance of a modern financial takedown isn't in the what, it's in the how. To understand how a small team could evaporate $100 billion, you have to look at the engine of the short sale. In a typical investment, you buy a stock hoping it goes up. In a short sale, you bet everything on its collapse. But Hindenburg didn't just bet, they engineered the conditions for the fall. The mechanism Hindenburg exposed was a sophisticated loop of circular funding. According to the 32,000-word report, the Adani Group utilized a network of 38 shell entities in tax havens, like Mauritius. Think of these entities as financial mirrors. Their only purpose was to reflect the empire's own money back at itself. Imagine you own a house worth $1 million. You want it to be worth $10 million, so you create 10 fake companies in an offshore island. You give those companies your own money, and then those companies buy shares in your house at inflated prices. To the outside world, it looks like there is a massive global demand for your property. The price skyrockets. This isn't just growth, It's a manufactured reality. The core of the allegation was that these offshore shells were being used to bypass Indian SEBI regulations, which mandate that at least 25% of a public company must be owned by the public, not the owners themselves. By using these ghost investors, the group allegedly maintained a 90% control over their shares. This created a liquidity trap, because so few shares were actually available for trade. Even a small buy order could send the stock price to the moon. But the risk was hidden in the pledge. To fund his massive expansion into green energy and cement, Gautam Adani did what most billionaires do. He used his inflated stock as collateral for loans. He went to global banks, Wall Street giants, and said, "My stock is worth billions. Lend me billions in cash." This is where the financial nuclear option resides. If the stock price drops, the collateral is no longer enough to cover the loan. The banks then issue a margin call, demanding more cash or more stock immediately. If the company can't pay, the banks are forced to dump the stock on the open market, causing a death spiral. Hindenburg knew exactly where the tripwire was. They didn't just publish a report, they waited for the moment of maximum leverage. The Adani Group was in the middle of a $2.5 billion follow-on public offer, FPO. They needed the world to believe the illusion for just 3 more days. Hindenburg struck 48 hours before the deadline. The warning signs had been there for years. Investigative journalists and credit analysts had pointed out the eye-watering debt levels, but the authority bias was too strong, because the empire was so closely tied to India's national infrastructure goals. Investors assumed it was protected. They mistook political alignment for financial stability. Then came the escalation. According to Hindenburg's research, the auditors responsible for checking the books of this multi-billion-dollar empire weren't a Big Four global firm. Instead, they were a tiny firm of young accountants, some in their 20s, working out of a small office. This was the curiosity gap that turned skepticism into panic. If the gatekeepers were this small, how big was the lie? Hindenburg's mechanism wasn't just finding a mistake, it was proving that the emperor had no clothes. They presented 88 specific questions to the Adani Group, demanding transparency on the offshore shells. The response they got wasn't a financial rebuttal. It was a 413-page emotional appeal, calling the report a calculated attack on India. In the eyes of Tier 1 institutional investors, that response was the ultimate tell. When a company answers math with nationalism, the smart money leaves the room. The mechanism of trust had been replaced by the mechanism of fear. The margin calls were coming, and the $100 billion fortress was about to become a ruin. The collapse was not a slow burn, it was a vertical drop. In just 10 trading sessions, the Adani Group's market value hemorrhaged over $110 billion. The world's third-richest man plummeted down the billionaire rankings in real time, losing more wealth in a week than most countries produce in a year. The safe bet had become the ultimate toxic asset. But the real damage wasn't just on the balance sheet. It was systemic. As the stock price crashed, the margin call nightmare became a reality. Global investment banks Credit Suisse, Citigroup, and Standard Chartered began internal risk assessments. Reports surfaced that some of these giants had stopped accepting Adani bonds as collateral for margin loans. The message from Wall Street was clear. When the math doesn't add up, the friendship ends. The perpetual motion machine of debt had finally hit a physical wall. Trust, the invisible glue of the global economy, had evaporated in a matter of hours. In an attempt to stop the bleeding, the Adani Group performed a tactical maneuver rarely seen in financial history. They pulled their $2.5 billion share sale after it was fully subscribed. To the public, they framed it as a moral decision to protect their investors from market volatility. But to the analytical eye, it was a total surrender. The empire was no longer playing offense. It was in a desperate fight for its very existence. The shockwave reached the halls of Parliament, sparking a geopolitical stress test. If a nation's critical infrastructure is tied to a single corporate entity, what happens to the nation when that entity is targeted by a 40-page PDF? However, the story didn't end with a total collapse. In a masterclass of sovereign crisis management, the group began a massive deleveraging campaign. They didn't just wait for the banks to call, they moved first, paying back billions in loans early to release pledged shares. They brought in White Knight, investors' massive contrarian funds like GQG Partners, who bet nearly $2 billion that the underlying physical assets, the actual ports and power grids, were still worth the gamble, regardless of the accounting noise. The hunter, Nathan Anderson, remains silent in his New York office. Hindenburg Research doesn't do victory laps. They move on to the next kill. Shortly after the Adani fallout, they pivoted to Jack Dorsey's Block Inc., proving that no one from Asian industrialists to Silicon Valley royalties safe from the PDF assassin. This wasn't a one-off event. It was the birth of a new era. The legacy of this $100 billion collapse has fundamentally altered the architecture of the 2026 financial world. We are now living in the age of asymmetric information warfare. It is a time where a small team of specialized researchers can bypass the SEC, the FBI, and national regulators to deliver market justice or market chaos directly to the global public. The lesson here is chilling. In the digital age, empires are no longer conquered by armies or heavy artillery. They are dismantled byte by anyone brave enough to look into the shadow network, verify the data, and hit publish. The giants haven't disappeared, but they are now looking over their shoulders, knowing that somewhere, a small team is already drafting the next document that could end them. The Hindenburg effect has proven that the greatest threat to a billion-dollar empire isn't a competitor, it's the truth hidden in its own books. But it raises a deeper question. Is this market justice, or is it a new, dangerous form of financial hit job? If you found this deep dive into the mechanics of the $100 billion collapse insightful, hit the like button and subscribe. We go beyond the headlines to investigate the hidden systems that run and sometimes break our world. And I want to hear from you in the comments. Do you believe short sellers like Hindenburg are the heroes we need to keep corporations honest? Or are they just profit-driven assassins? Let's start the conversation below. As always, stay curious and stay analytical. I'll see you in the next investigation.